Hello and welcome to another update video about Natgas. Natgas started quite friendly into the week. We already talked about that in yesterday's video. We already saw that positive reaction. Yesterday we hadn't really seen any impulsive wave structure yet, but I gave you this corrective price channel. Plus we looked at the ascending trend line. Both are broken now, certainly indicating that this move down could be finished. Until we break above the 234 level though, it could still come down and use that orange box once more. We're going to talk about that in this video. Important is though that, and I go to the 1 hour chart, important here is though that we counted the B wave as complete down here. We identified an impulse to the upside. We identified off the high of the impulse of that small wave 1 here, which peaked on the 17th of April. By the way, this is the spot chart. Yeah, we're gonna take a look at futures in a minute, or in 2 minutes, or in 5. So that this is the 227 peak here in a wave 1, and then we identified based on that the support zone for a possible wave 2. A, B, C, yeah, we hit this area. We identified 5 waves down in C, and all we needed to see was now an impulsive move to the upside to indicate that wave 2 is indeed over. I still don't see that impulsive advance, even though, even though we can now possibly, well, I can assume that the low has been made here. I mean, don't get me wrong, we had an A wave, we had a B wave and a C wave. We counted 5 waves down. The only thing why I haven't really, or I cannot confirm yet that a low has been made here, is that the movement to the upside isn't really impulsive. That also would lead me to the alternative count. So I currently would leave it as it is, as a primary, that the low is in now here in the wave 2. But obviously the alternative exists, and the alternative would be that circle wave 2 will be reset a little bit lower. How would that work out? Well, quite simply, we could just say we came down in an A wave. This is now a B wave in a wave 2, and we come down once more in C. That is definitely possible because what we see here at the moment, this move to the upside, is not impulsive. It's not strong enough yet. It can always become strong enough, but at the moment it's not strong enough. That would make me, or give me, some hints that we need to be on the side of caution still. And only really if we now break above the B wave high, which was that 234 level, yeah, I can really confirm that the wave 2 low is in. Because again, until then, this could just be an A wave down, a B wave up, and a C wave down to use that orange support area, you know, a little bit more. Support here is $2.12, $2.08, $2.03, and $1.97. Below $1.97, we would have to expect another, let's call it bear market low. Until then, we can assume that first of all, this B wave bottomed on the 14th of April, and then that here the wave 2 bottomed. But this is not high confidence yet, because it would put it would look perfectly like an A, B, C structure. Yeah, that would work out quite well, especially here. You know, A wave down, then the choppy nature of the advance here could just be a B wave, and then we come down once more and see. There's no way of predicting which one is going to be, you know, working out. To be honest, I mean, I'm currently following primarily the view that the low is in, but that's really only because we've seen quite a nice advance. We've broken out of the corrective price channel. But looking at the price structure, I think it's actually quite likely that at least there will be another test of the orange box. But things can change quickly. The point is here, the trend has possibly shifted to the upside. And if it has, the setup gave and still gives, if we get into it, again, everybody a favorable reward to risk ratio to trade the overall C wave here to the upside to at least $3.20. But the condition is that 197 is holding. Now this was the spot chart. Now let's look at the futures, because here we have a very similar development. on the futures chart. It's just the prices are a little bit different here. We also counted 5 waves down to complete the wave 2 in an ABC correction. Here the advance isn't that convincing. Here it still looks very, very messy, and well, even more messy than on the spot chart. And here I would assume, you know, that it looks more like a B wave, this one here. So again, what I showed you on the spot chart, A wave down, B wave up, C wave down. That's still possible as long as we stay above that April high, which was made here at 239. As long as we stay below 239, in my opinion, it is still at least reasonable to expect another dip into the orange support area to just use it a little bit more before we finally then rally in that third wave of a C wave. What else to mention? Not much. I mean, again, we would need to see an impulsive advance to the upside now to really confirm the low has been made here in this wave 2 of a larger C wave. Yeah. But yeah, let's see. I mean, at the moment, just sideways here. The spot chart looks a bit different. And here the condition is on the futures chart to keep the scenario alive that we are going to rally in a third wave in the C wave. It needs to hold the $2.02 level. Very important. That's again here the 78.6 Fibonacci retracement level. Very important support. We have overall in this larger support area here support at $2.17, $2.13, $2.08 and $2.02. Alright, that's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.